Okay, ma. Now, very good morning to all. We are going to discuss about GST amendments. So, whatever the amendments we are going to discuss now are useful for the students who have studied the GST, whether in our MM or in our any other institution, who have studied the amendments up to April 30th, 2022. That means whatever the amendments we are going to discuss now, they are relevant for CA inter students as well as who are going to write the exam in May 2023. In the same way, with respect to CMA inter students, we are going to write the exam in their June 2023 exams. So, whether this booklet or these amendment videos will going to cover the amendments for the period from the 1st May 2022 to 31st October 2022. So, in this particular amendments video, we are going to discuss the amendments or the updates for the period from 1st May 2022 up to 31st October 2022. Okay. And this particular video is going to be uploaded in our YouTube channel, Masterminds for CA. So all these amendments will be discussed in detail in this particular video. So definitely please watch the particular video and get more of marks by reading that particular material which is provided to you in this particular link, or as well as by watching this particular video. So generally, why this particular May 2023 amendments video is that much important? Because there are so many circulars that are issued with respect to our exam. That's why not all the circulars. That means even though in this particular amendments material, we covered all the amendments, but all these amendments do not carry equal importance level with respect to the examination point of view. So certain amendments may be very important from the examination point of view. Definitely we will discuss them in detail, and which are not that much actually important from the examination point of view. We may have a quick look at them. Okay, that is the thing we will do in this particular amendments video. And in the same way, along with the amendments of this 1st May 2022 to 31st October 2022, for your easy reference, November 2022 attempt amendments are also given as a part 2 in this particular material. So, without any further delay, I am going to start this amendments for GST May 2023 videos. So, the first amendment, even though it is not discussed in the material, which is actually with respect to applicability of GST compensation cess. Sir, what is meant by this GST compensation cess? That means the taxation systems can be divided into two types. One is origin based taxation and second one is destination based taxation. In origin based taxation, generally the revenue will go to the seller residing state. Under destination based taxation, generally the revenue will go to so the taxation systems, already I told you, can be divided into two types. One is origin based and second one is destination based. With respect to origin based taxation, the revenue will go to the seller residing state. Whereas with respect to destination based taxation, the revenue will go to the buyer residing state. But whereas already you know that GST is a destination based tax. Some taxes like CST, Central Sales Tax, which are origin based taxes, are merged into GST. Thereby, the seller states are here losing the revenue. The seller states are here losing the revenue. So, in order to implement the GST, the center has promised the state that whatever the loss of revenue that will be there, whatever the loss of revenue that will be there, that revenue will be compensated by this particular person. That means the center. In the name of GST compensation cess. Okay. So why this particular GST compensation cess was levied, ma'am? To compensate the states for the loss of revenue arising on account of implementation of GST, and this GST compensation cess will be paid for a period of 5 years. Okay, this is the point, already we know that. So, based on this topic what we have discussed, in order to provide the compensation to the states, government, which government? Central government is allowed to levy. So, in order to provide this compensation, the central government is allowed to levy GST compensation cess on intrastate as well as interstate supplies of not all the goods, only on the notified goods. Generally, majority cases they can be demerit goods or luxurious goods like that. Okay. Initially, this particular GST compensation cess was proposed to be continued for 5 years. That means from the date of implementation of GST, that is from 1st July 2017 up to 30th June 2022. That means till the expiry of 5 years, initially this particular GST compensation cess will be levied. But what happened is, already we know with respect to our GST collections, the government has seen a sudden fall of the revenues in the year 2020 as well as in the year 2021 on account of COVID lockdowns. And in order to compensate the states, the central government has to take loan to compensate this particular revenue loss to the state. So that's why the central government, that means the GST Council, in its 42nd meeting has decided to extend this GST compensation cess up to 31st March 2026. So now, after 30th June 2022, even though this GST compensation cess was there, the central government is under no obligation to compensate the states for any shortfall in their GST collections. That means the entire proceeds of the GST compensation cess shall be used by the central government to repay its earlier loans. Okay. So that's why the what is the logic of extension of this GST compensation cess was like that, ma'am. Okay, you need to remember that point. And after that, now we are going to enter into the amendments with respect to the second chapter, supply under GST. So with respect to supply under GST, so initial amendment is, this is practically not an amendment, ma, this is a clarification. Why clarification will be issued by the government, ma? If at all any ambiguity or confusion is there, in order to avoid that particular ambiguity, clarifications are issued by the government. Okay. Here, this particular clarification is regarding employer-employee relation. So, this person is a employer and this person is a employee. So, generally, what we know with respect to employer-employee relation, ma? What we know with respect to employer-employee relation? Generally, we know that whatever the services that are provided by the employee to the employer, which are in the course or in relation to his employment, shall not be treated neither as a supply of the goods nor as a supply of service. That is the point we need to remember as per 7 subsection 2. Read with schedule 3. whatever the services that are provided by the employee to the employer in the course of employment is neither the supply of the goods nor the supply of service. Therefore, there shall not be no GST on employee providing services to employer in the course of employment. In the same way, whatever the gifts the employer has given to the employee, if the gift value is not exceeding, that means less than or equal to 50,000 rupees in a financial year, is not a supply and there is no need to pay any GST on it. But whereas if the gift value is more than 50,000 rupees and if at all it is given without any consideration, which is outside the scope of GST, which is outside the scope of employer-employee relation, then definitely what is the position, ma'am? It is liable to GST. This is the point already we know. So, as per 7, subsection 1, clause C, read with schedule 1, which majorly deals with deemed supplies, whatever the gift value which is less than or equal to 50,000 in a financial year by the employer to the employee shall not be treated neither as the supply of the good nor as the supply of service. This implies that if the gift value is more than 50,000 rupees in a financial year and which is outside the scope of employment agreement, definitely if that particular gift is made in the course or furtherance of business, it is liable to GST because employer and employee are related persons. This is the topic, already we know that. Okay. But whereas with respect to what is the clarification that is issued here? That means whatever the perquisites that are provided by the employer to its employee, which is in terms of employment agreement, definitely what is the position, ma? It is not subject to GST. Already we know this point. Clarification here confirms what you know. That is the thing only. So that's why I don't think this particular amendment will have that much impact on the exams. So what is the clarification, ma? Whatever the perquisites that are provided by the employer to the employee in terms of the agreement which is there between employer and employee, in those cases, these perquisites will not be subject to GST because they are taxable under income tax generally. So this is only a confirmation, clarification that was issued. Already you know this particular point. Okay. Now we need to proceed to the second one. Previously, the logic is simple, ma, with respect to that employer-employee relation. That means previously, with respect to those perquisites are not subject to GST was a press release that was given by the government. Okay. But now, what happens is this press release which is given by the government will not have any binding effect on the GST officers. So that's why this clarification has been brought by CBI CMA. Now that particular circular is needed to be followed by the department also. That is the purpose. The point remains the same. But whereas with respect to previous perquisites are not subjected to GST was a press release that was given by the government. Since press release will be given by the government, does not have any binding effect on the GST officers. That's why there is a need to give the clarification by the CBIC. Therefore, this particular CBIC will give that. That is the point we need to remember. So, the next point we need to discuss is here is the clarification also. This is also a clarification that is given with respect to section 7, subsection 1. So what does this section 7 subsection 1a deals with? Section 7 subsection 1a here deals with generally once it was established as a supply as per section 7.1, whether it is a supply of the good or supply of service will be taken care by this 7 subsection 1a. Once it is a supply as per section 7.1, whether it is a supply of the goods or supply of service will be taken care by this 7 subsection 1a. That means 7 subsection 1a itself will not say whether the transaction amounts to supply or not. It is the duty of section 7.1 to decide whether it is a supply or not. If at all it is a supply as per 7.1, then whether it is a supply of the good or a supply of service, simply whether it deals with 7 subsection 1a deals with classification. So 7 subsection 1a read with schedule 2 deals with classification, whether it is a supply of the good or a supply of service. In that 7 subsection 1a there are 6 points or 6 paras. Previously 7 paras were there, but in recent amendment 7th one was removed. There are 6 points there. In that 5th point is there in that 5th para with respect to schedule 2. There is 1 point with respect to tolerance, forbearance or to do something. With respect to that particular point, one clarification was given. Generally, what is that particular entry is? Forbearance, that is refrain from an act, tolerance or to do something. Definitely it amounts to supply of service as per 7 subsection 1a. Based on this particular entry, there were many disputes between the taxpayers and the GST authorities, whereas the department tries to invoke this particular entry and tax many commercial transactions. Therefore, there arises a urgent need for the CBIC to clarify the scope of this particular entry. So that's why to clarify the scope of this particular entry, there was one circular that was issued. So what is this CBIC clarification with respect to this entry number 5 or entry number in para number 5, that particular entry? Those 3 activities. What are those 3 activities? Forbearance, that means to refrain from an act, tolerance or to do some activity. In order to treat the 3 activities to be covered under the 7.1a, 2 conditions are needed to be satisfied. Okay, the conditions are here will be one of the parties of such agreement, one of the parties to such agreement or contract must have the contractual obligation to do so. That means what is the condition? First condition here, there should be a contractual obligation. There should be a contractual obligation. And second one, some consideration should be there from the other party. This is the second condition you need to satisfy. So what is the second condition, ma'am? Some consideration must flow in return. If at all these 2 conditions are satisfied, then only the above 3 activities will be covered under the above entry. If these 2 conditions are not satisfied, it can't be covered by the above entry. This was the CBIC clarification that was issued. And we will elaborate with some examples with respect to this. In that, the first one will be non-compete agreements, which deals with forbearance or to refrain from an act. Let's say example, with respect to this non-compete agreement, what generally will happen? There will be one business unit, that means one person agrees not to compete with another business person in a particular product or a service or in a particular area. For this doing particular this, he will get some consideration in the form of some in the form of money or some in-kind consideration, which is going to be received from other party. These type of agreements are generally known as non-compete agreements. Here, one person agrees not to compete with the other. That means he will refrain from competition there. For that, he will receive some consideration from the other party. Here, what is the condition? There should be a contractual obligation. Yes, here business unit 1 is having a contractual obligation to refrain from competition. Second one, there must be some consideration that is moving from the other party. Yes, definitely there is a consideration. In our example, 20 lakhs is moving by the other party. Okay. Therefore, it will be covered by the above entry. In the same way, with respect to second example, what we can say here, let's say Raj Properties received some 10 lakhs compensation from a school project. In return, it promises that it will refrain from constructing more than a certain number of floors, because the students should not miss the view of the nature. Okay, here, what is the point here? Instead of constructing this many number of floors, only this many number of floors are going to be constructed. For that, for this particular construction, that means definitely they are refrained. They are refrained from constructing more than certain number of floors, even though they are permitted to do so by the municipal authorities. That means there is no violation of law is there. But still, they are refraining. That means they are not doing that particular thing because they entered into agreement with the school. Here there is a contractual obligation on the Raj Properties Limited to refrain itself. For that, it is getting some 20 lakhs or 10 lakhs as a consideration from the other party. So here there is a contractual obligation. Second one, definitely what is the position, ma? What is the position with respect to the second one? With respect to the second one, they are getting some consideration. If at all these two conditions are satisfied in this particular example, that's why it will be covered by the above entry. Yes, you are liable to pay the GST. And in the same way, a resident welfare association tolerating the use of loudspeakers for the early morning prayers by the school located in the colony, subject to the school paying the agreed sum of money to the resident welfare association as a compensation. Here, the second point, it comes under tolerance. What is meant by the word tolerance? Tolerance means here, bear some inconvenience. Even though it is inconvenience to the resident welfare association by those loudspeakers, this resident welfare association will tolerate the use of the loudspeakers by the school. For that, that particular school will pay a fixed sum to the resident welfare association. Therefore, there is a contractual obligation to tolerate something. For that, it is receiving some consideration in return. Therefore, what is the position? It will be clearly covered by the above entry. Another resident welfare association related example, what we can say is, let's say a manufacturing company is there. It receives 10 lakhs from this resident welfare association. For what, for installation of the equipment for this zero emission. Zero emission. Okay. Generally, if you hear this particular manufacturing company receiving 10 lakhs from the resident welfare association of a neighboring residential complex and in return agrees to install the pollution control equipment, nothing but zero emission equipment. Even though this emission was within the prescribed limits And there is no legal obligation upon the manufacturing company to do so. It is not the statutory requirement, because whatever the emission it releases, it is within the prescribed guidelines that are specified by the government. But still, it will install a zero emission equipment. For that, what is the position, ma? For that, what is the position, ma? Definitely, what is the position? Yes, there is an obligation to do something because of contract. Second one, for that, it received some consideration. Therefore, it is also covered by the above entry. Okay. So, the next point will be some clarifications with regard to the common commercial transactions, just like the point what we have discussed. In that, the first point will be liquidated damages on breach of contract. Liquidated damages on the breach of contract. So, generally, in case of breach of contract by one party to the contract, generally compensation or liquidated damages are to be paid as per the terms and conditions of agreement. But the question arises here, whatever the liquidated damages or compensation the contractual party is paying to the aggrieved party, that amount can be treated as consideration or not is the question, ma'am. Answer is no. It can't be said to be a consideration for tolerating the breach or non-performance of contract, because the contracting party will not expect the contract to be violated. They in fact want the contract to be performed. If at all I just want to purchase some raw material from the other party, for that I will enter into a contract. At the time of entering into the contract, I will have the intention that those raw materials will be delivered to me in time. And by using those raw materials, definitely I am able to procure some goods. That means produce some finished goods. That was my agenda. It was never my agenda that by putting some clause in that particular contract, by that means if at all you are unable to fulfill your contractual terms and conditions, you need to pay this much of amount as penalty. Generally, that penalty clause will be there in order to make him forcefully deliver those items. Okay. Generally, we don't have the intention to get that money. For getting that particular penalty, we will not enter into the contract. Na? Therefore, this liquidated damages or the penalty are not the desired outcome of the contract. Okay, these amounts that are generally paid to compensate the loss or the damage that is suffered by the aggrieved party due to breach of contract. That's it. It is not the agenda, it is not the intention of the contract there. Therefore, they do not constitute the consideration for the supply, and hence they are not taxable. So, they can't be said to be the consideration received for tolerating the breach or non-performance of the contract. Therefore, for that there is no contract, that means either express or implied, there is no such contract. For express or implied, there is no such contract. That is the point we should remember. Okay. And you can link this particular point to one point that is there in exemptions chapter also. With respect to that exemptions chapter, you may recall the specific exemption in relation to non-performance of any contract that is entered with the government, for which the consideration is the liquidated damages, is exempt. There is no need to pay any GST. This was the exemption notification point. So whatever the liquidated damages, generally we will pay to the government those liquidated damages are exempted. This is exemption notification point mark. But after this particular clarification, this exemption has no more relevant because it won't even qualify as a supply. It won't even qualify as a supply. That is a point we need to remember. Okay. They do not constitute consideration for the supply and hence it is not taxable. Next point will be in this case. This is with respect to check dishonor. This point is in relation to check dishonor. So with respect to this check dishonor, generally I received a check for some 10 lakhs from my debtor. If at all that particular check bounces, I may have collected from him some check bounce charges or dishonor charges or penalty. The question arises, whatever the penalty or the check dishonor fine we collect, whether it amounts to a consideration for this point, answer is no one. Because there is never an implied or express offer or willingness on the part of the supplier that he would tolerate the deposit of invalid or fake instrument of payment against the consideration in the form of check dishonor fine or penalty. Generally, while receiving that particular check, definitely what you expect. Generally, you will expect the check will be honored and the amount will be credited in your bank account. You will never expect that, or you will not have the motto that please see God that this check should be dishonored. Then only I will get the check dishonor fine or penalty. Like that, we will not feel in such a way now. So generally, there can't be any express or implied agreement with respect to that. Therefore, it can't be treated as a consideration for any service. Hence, it is not taxable. That is the point also you need to remember. Penalty for violation of laws. Technically, they are known as contractual penalties. So, with respect to contractual penalties, okay, some cases they can be taxable. But whereas with respect to statutory penalties, like the fines that are paid for traffic violations or for the violation of pollution norms or the penalties you paid under income tax or under GST is not a consideration you receive, is not a consideration for any supply received. Therefore, it is not taxable at all. Technically, there is no agreement between the government and the violator specifying that the violation would be allowed or permitted against the payment of fine or penalty. Government will never do that and government will not enter into these activities because government will not say, okay, please violate this particular rule and please pay this penalty. That means if at all you pay this particular penalty, you can violate the rule. There is no such agreement between the government and the violator now. And in fact, if the government wants to do that also, there can't be such agreement. That means those type of agreements are not valid because there's a violation of law is never be a lawful object or consideration. Will never be a lawful object or consideration. So that's why what is the position, ma? Definitely yes. It can't be treated as consideration and no GST is payable on the statutory penalties. And in the same way, next point will be notice pay recovery. So what is meant by this notice pay recovery, ma? In case if the employee leaves the job before the specified period of agreement period, the employer may recover a fixed amount in the form of forfeiture of the salary or recovery of the bond amount. This amount cannot be said to be the consideration for tolerating the act of such premature quitting of employment, but as a penalties for non-serious employees. That is the motto. It means generally the employer will not want to get the income by way of this notice pay recovery. Na? We just want employees to run his business, not to get income from the employee's termination or employees leaving the organization. So this notice pay recovery will never be a income for the employer. This is one prospect. And another one, in order to treat this particular activity should be covered by the entry, there must be some consideration to the employee there. But since the employees are not receiving anything, na, since the employees do not get anything in return from the employer, for whatever the payment they made, that means whatever the amount that is forfeited, this notice pay recovery by the employer is not taxable, as definitely it is not a consideration for the service or tolerance. Okay, this is the point you need to recover. So what is the amount that is recovered? What is the amount that is recovered? By way of this notice pay recovery will not be treated as a valid consideration. And in the same way, if the employer terminates the employee, reverse. That means if reverse is the case, that is the employer terminates the employee before a minimum agreement time and pays a specified amount to the employee, then is it taxable under GST? No. It definitely will be covered by in the course of employment, and it would not be amounts to supply as per section 7, subsection 2, read with schedule 3. That means the reverse position, whether the amount is recovered from the employee or if the amount is paid to the employee, in both cases, what is the position? It can't be treated as. Next point will be general late fee, penalties, interest, that means delayed payment charges. Generally, if the payment for any service is received late by the supplier, the late payment fine or interest or delayed payment charges may be levied by the supplier, which shall be always treated as a supporting activity, and it will be treated as a natural bundle. That means whatever the late fee or delayed payment charges you pay, they will be in conjunction with the principal supply of either supply of the goods or supply of service, as the case may be. Therefore, whatever the late fee, interest, delayed payment charges will be treated as part and parcel of the main supply, that is the principal supply, whether it is a supply of the good or a supply of service. Along with that, it is taxable. It can't be treated as a tolerance or a forbearance like point. It is not an independent activity. It will be treated as part and parcel of the composite supply. And what is the rate that is applicable to principal supply? Here it will be applicable. So accordingly, the late fee or the interest shall be assessed at the same rate as the principal supply. Therefore, it can't be treated as a tolerance. Okay. And the example I can tell you with respect to that, take the example of railway ticket. If a railway ticket of some 2000 rupees was booked for AC class, and on its cancellation, a fee of 1000 rupees was deducted from the amount already paid. In that case, this cancellation can be treated as tolerance. Answer is no, okay. Because this cancellation will be the part and parcel of the original contract. Therefore, it is a natural bundle. Therefore, what is the rate that is applicable on the transportation of the passenger in AC class? Let's say 5%. 5% is the tax rate on the transportation of passenger in the AC class. In that case, that 1000 rupees will not be treated as a tolerance amount, ma. It will be treated as part and parcel of the original transportation of passenger service, and GST will be levied at the rate of 5%, which is actually the rate of transportation of passenger in AC class. But in the above example, I just want to make a small change here. If at all the cancellation charges were in relation to non-AC, in that case, what is your answer? If at all it is non-AC, then automatically non-AC, sleeper, second class, all these are exempted. Okay. If at all the service of transportation of passengers by non-AC class was exempt, then on this 1000 rupees cancellation charges also GST is exempt. Why ma? Because what is the point there? You should remember, definitely what is the rate that is applicable to principal supply will be applicable here also. Here principal supply is exempted, that is non-AC journey. Therefore, whatever the cancellation charges in our example 1000 rupees, on those services, on those cancellation charges also, we are not liable to pay any GST. It is exempt. Next point is with respect to electricity. So with respect to electricity, generally the boards will collect a fixed sum of the amount along with that variable unit cost. That means irrespective of your electricity usage, definitely you need to pay a fixed sum of money. That fixed sum of money, what is the position, ma? That fixed sum of money is treated as tolerance or something like that is the question here. Answer is no. So both the components of the price, that is electricity bill, that is the minimum fixed charge or the capacity charges, and the variable one, which is actually needed to be paid as per the usage. Both are charged for the sale of electricity. Here electricity is already exempt. When electricity, the principal supply is itself exempt. So whereas electricity is exempted, therefore on these charges also you are not liable to pay any GST. That is the point you need to remember. And what is example I told you is also applicable with respect to this cancellation charges also. So with respect to cancellation charges, the example already we discussed. That means in case of cancellation of services like hotels, movie tickets, flight tickets, whatever the cancellation fee that is charged, that is forfeited as a part or a whole of a consideration, or whatever the security deposit that was there, okay, shall not be treated as a separate supply of tolerance. I already told you that. This service allowing the cancellation against the payment of cancellation charges is a natural bundle of this particular transport or the hotel or the movies. Therefore, when it is a natural bundle, it will be treated as, composite supply. And what is the rate that is applicable to principal supply? Applicable in this case also. Already I told you one example with respect to this cancellation charges also. Railway ticket example just now we discussed. This can be more relevant to this point also. Okay, a railway ticket for AC, upon its cancellation 1000 rupees was deducted. Then AC cancellation, definitely AC journey is taxable. Therefore, what is the rate that is applicable to transportation of the passenger in AC class will be applicable to this 1000 rupees cancellation charges also. If at all, that particular 1000 rupees is the cancellation charges with respect to a journey of a passenger by a non-AC railway, definitely non-AC is exempted. In those cases, the cancellation charges are also exempted. We are not liable to pay any GST. That is the point we need to remember. Okay. And this is the summary of the circular what we have discussed. So as per schedule 2, para 5.e agrees to obligation. There are 3 cases: to refrain from an act, to be considered as a supply of service. The above 3 activities, that means refrain from an act, tolerance, or to do something, to treat these activities as a supply of service, 2 conditions are needed to be satisfied. First one, there should be a contractual obligation. There must be an express or implied agreement or a contract must exist to fall within the above point. And consideration must flow in return in this particular contract. If at all these 2 conditions are satisfied, then only what is the position ma? That particular activity will be covered by the para number 5, and then only it can be considered as a supply of service of refraining from something or tolerance, or there is an obligation to do something. So that is the point we should remember with respect to this particular circular ma. And we will see that point in the material also. You can check it once. See, this point already we discussed with respect to employer and employee. It is only a clarification in nature. Previously, this was a government press release. Now, it was converted into a circular by CBIC. In both cases, generally, whatever the perquisites that are provided by the employer to the employee, as per the contractual agreement, it will not be subject to GST. And this is the clarification what we have discussed. Refrain from an act, tolerance, or obligation to do something. For this, these are the 2 conditions that are needed to be satisfied. First one, there should be agreement. Second one, there should be a consideration moving from one party to other. Then only it will be a supply of service. After that, we discussed about liquidated damages, check dishonor charges, statutory penalties, that means forfeiture of the salary, late fees, okay, power charges, cancellation charges, okay, all these things. So these are the things. This is the circular what we have discussed. Okay, there ends chapter number 2. The next chapter, that is levy and collection of GST. So with respect to levy and collection of GST, with respect to this particular chapter, we are going to discuss about composition scheme as well as with respect to RCM related topics. In that, initially we should start with composition scheme relevant to topic. So, what is the amendment that is there with respect to this composition scheme, which is section 10? Generally, already we know that with respect to this composition scheme, there are few notified goods which are ineligible. There are few notified goods which are ineligible for taking the composition scheme. In that, what is the old provision that is there? Ice cream, pan masala, tobacco, aerated waters. These are the things that are ineligible for composition scheme. But now, whereas the amendment that happened previously, along with ice cream, pan masala, tobacco, aerated water, now the bricks, building bricks, fly ash bricks, roofing tiles. Whereas previously in the roofing tiles, with respect to fly ash bricks, fly ash should be 90% or more fly ash content will be there. 90% or more fly ash content will be there. With respect to that, now that particular word was removed. That means after amendment, all kinds of fly ash, whether they are having 90% or more fly ash content or less than 90%, shall be considered as notified goods for the purpose of section 10. Those item manufacturers are not eligible for this composition scheme. So that is the amendment, not that much importance from the examination point of view. Single reading is more than sufficient with respect to that. Now with respect to RCM, we need to see the point here. With respect to RCM, generally tax payment systems are divided into two types. One is FCM, second one is RCM. With respect to FCM, recipient will pay to the supplier. In return, supplier will pay to the government. Under RCM, what is the point? Under RCM, recipient will pay directly to the government. That is the difference between FCM and RCM. So with respect to the GTA, what is the old provision that is there with respect to GTA? What is the old provision that is there with respect to GTA? The old provision with respect to GTA is, previously there is a, generally I just want to merge it here with respect to that, because even though it is there in the material as a separate topic in exemptions, so whatever the amendments that are there to GTA, all those amendments I will discuss at this particular point only. So the amendment 1 with respect to GTA is, there is a value based exemption for GTA which is previously. So what is the value based exemption that is there previously? What is the value based exemption that is there previously? The value based exemption that is there previously is, with respect to GTA, there is only one truck. In that one truck, there is only one consignment. In that particular one truck, there is only one consignment. And the transport or freight charges are less than or equal to 1500, it is exempted. In the same way, with respect to a single consignee, the freight charges are less than or equal to 750, it is exempted. This is the topic that is there before amendment. Okay. But now, this particular exemption for GTA service was deleted. Now it is no more. That means value based exemption for GTA service was now deleted. So, but only the exemption that was withdrawn is only with respect to value based exemption. Whereas remaining points, whatever the remaining exemptions that are there, with respect to that, definitely they will continue until they are amended. This is the first one. And second amendment with respect to GTAs is the thing which is relevant for this particular chapter, FCM and RCM. What is the point that is there generally with respect to GTA? There are two options previous. One, if the GTA wants to follow the FCA, the rate of tax is 12%, he can claim the full ITC. If at all GTA has not paid GST at the rate of 12%, then automatically RCM is applicable and recipient is liable to pay the GST at the rate of 5%. So this is the point what we have discussed previously. Okay. So, but now there is another option that was created here. Now GTA has the two options now. As usual, it opts to pay. Now there are three options practically with respect to GTA. If you observe here, with respect to GTA, there are three options that will be there. Option 1. With respect to option 1, GTA will pay GST at the rate of 12%. FCM is applicable then. Then whatever the input services that are there to this particular GTA, on them definitely GTA can claim the ITC. And in the same way, This GTA services which are received by the recipient, on them also recipient can get the IDC. On them also recipient can get the IDC. Okay. What is option 1 ma? In option 1, GTA will pay GST at the rate of 12%. In that case, FCM will be applicable, and whatever the inward supplies in relation to the trucks or something else the GTA receives, on them GTA can claim the IDC, as well as whatever the GTA services that are availed by the service recipient, that particular service recipient can also claim the IDC. Okay. And there is another option now that was newly created is option 2. GTA will pay the GST at the rate of 5%. That is also called as FCM now. That means under FCM another option is also there. With respect to that, whatever the input services that means inward supplies that particular GTA receives, on them GTA cannot claim the IDC. But GTA services that are received by the service recipient, on them the service recipient can claim the IDC. That is the point we need to remember. Okay, ma'am. Option 1 and option 2. This is the option 2 that was newly created after the amendment. So what is the amendment that was newly created, ma'am? There are two options previously. Option 1, GTA has to pay GST at the rate of 12% under FCM. Whatever the inward supplies received by the GTA, on them no IDC is allowed. But these GTA services are availed by any service recipient. That service recipient definitely can claim the IDC. That means both the GTA as well as the recipient can claim the IDC on their inward supplies. But whereas with respect to option 2, now the new one that was created, GTA is liable to pay GST at the rate of 5%, and with that one is also covered under FCM forward charge mechanism. But in this ITC of the trucks, that means ITC in relation to trucks, simply whatever the inward supplies that the GTA receives, on them GTA cannot claim the ITC. But whatever the tax the recipient pays at the rate of 5%, that particular amount can be claimed as IDC by the service recipient. And option 3, already we knows that one, previously also there. GTA is not paying tax under FCM, that means neither 12% nor 5%, then RCM will be applicable. In that case, tax is to be paid by the recipient at the rate of 5%. Then this particular GTA receives any inward supplies, on them GTA cannot claim the IDC. But GTA services that were availed by the recipient, on them recipient can claim the IDC. So this is the new point that was created after the amendment part. So GTA has two options now. If it opts to pay GST under FCM, 12% GST with IDC, and 5% GST also under FCM without IDC. If it does not opt to pay GST under FCM, then as usual, recipient pays tax under 5% under RCM. This is the point you need to remember. But for that, two conditions are required to be satisfied by the GTA. The first one is GTA has taken registration with respect to that, and GTA has to issue the tax invoice and should make a declaration on the invoice. If these two conditions are satisfied, then FCM can be followed. So for option 1 and option 2, what we have discussed, so two conditions are required to be satisfied. First one, GTA has taken the registration under GST. Second one, GTA has issued the tax invoice, taxing charge under FCM, and also made declaration in the invoice. If these 2 points are satisfied, then what is the position? Definitely, yes, definitely FCM can be applicable. And next point will be with respect to postal department services. Previously, generally this topic is in relation to exemptions, but I covered here only. Previously, what is the old provision, ma? Generally, 4 activities that are done by the postal department are taxable if at all they are provided to any person other than government. If at all they are provided to any person other than government, then those 4 activities shall be taxable, that too under FCA. What are those 4 activities, ma? If at all you are able to recollect that: speed post, express parcel post, life insurance, agency services like distribution of mutual funds, passport applications, collection of the bills or fee payments, etc. These 4 services are taxable. Any services other than those 4, if at all they are provided by the postal department, were exempt from tax, irrespective of recipient. But now that particular point was now changed. Now, specifically 4 services are excluded. Specifically 4 services are now excluded, except that the rest of the things are taxable. That means exemption now available only with respect to the 4 services which are there on the screen, like book post, inland cover, ordinary post, which weight is less than 10 grams, and postcard. With respect to these 4 services only, definitely what is the position, ma? It is exempted, irrespective of the recipient. Okay. Except these 4 services, remaining all the services that are done by the Department of Post, other than these 4 services, shall be fully taxable under FCM. That is the point. If at all these 4 services are there, then with respect to that, what is the position, ma? It is exempt irrespective of the recipient. With respect to other services, what are the other services that can be there, ma? Like transfer of money orders, money through money order, savings account, postal order, speed post, express parcel post, life insurance, agency services, like that. Whatever the remaining activities that are there, every other service that are done by the postal department is taxable under FCM, forward charge mechanism, irrespective of the recipient. That is the point we need to remember. Okay. Next point is, ma, with respect to another point we need to remember is here. Renting of residential dwellings, actually that is the point we need to remember. Generally this point is linked with exemption as well as RCM. What is the old provision that is there? Services by way of renting of residential property for use as a residence was exempt from GST. That is a point that was there previously. So what is the point that was there? Renting of residential building for use as a residence is exempt from GST. Now, what is the amendment that was made under exemptions chapter now? That was in link with this RCM. Now the particular exemption was modified like this: renting of residential building for use as a residence, except where the residential building is rented to a registered person, is exempt from GST. Now what the exemption is saying, ma? That means if the residential building is given for residential purpose to a registered person, then definitely it is not exempted, it is taxable. Sir, is it taxable under FCM or is it taxable under RCM? What is the point? That is the point now we need to see. So with respect to this, a new entry of reverse charge was created, ma. Services by way of renting of residential building. Supplier can be any person. If the recipient is a registered person, then that particular service is covered by reverse charge. That is the point we need to remember. What is the point we need to remember here? See the point there. Renting of residential building, which is used for residential purpose. Which is used for residential purpose. If the recipient is a registered person, then it is taxable under a reverse charge mechanism. If the recipient is an unregistered person, then it is exempted. If at all the residential building is given for commercial purpose, the building is residential building, but it is given for commercial purpose. Recipient is a registered person, taxable under RCM. Recipient is a unregistered person, then also it is taxable but under FCM. That is the point we need to remember. With respect to renting of the residential building, which is used for residential purpose, if the recipient is a registered person, it is taxable, that too taxable under RCM. Service recipient is a unregistered person. Service recipient is a unregistered person, then it is exempted. With respect to residential building, used for commercial purpose, residential building which is used for commercial purpose, in that case, what is the position? Definitely, recipient is the registered one, taxable under reverse charge. Recipient is the unregistered one, then also it is taxable but under FCM, forward charge. That is the point we need to remember. So generally these 2 points deals with exemptions only, but we will see those topics in the material now. Just wait a minute. So composition levy and GST with respect to third chapter, see this. Previously some 90%, something like the words was there, but now if at all it is a fly ash break, automatically those manufacturer cannot opt for composition scheme. And with respect to RCM, see this, this word is removed. Now what is the point? GDA is having two options now. What are the two options the GDA is now having, FCM at the rate of 12% with IDC, FCM at the rate of 5% without IDC. If the GDA don't want to pay that, then only RCM is applicable at the rate of 5%. Next one is postal department. Already we discussed this word now removed. Why, in order to be in conformity with the exemption notification that was changed, these words are removed. Okay. And with respect to renting of residential dwelling to a registered person, supplier can be any person, and who can be the recipient also, registered person. What is the service? Renting of residential building to a registered person. Supplier, any person. Recipient is a registered person. In that case, what is the point, Definitely, RCM is applicable. That registered person is liable to pay the GST. And now we need to see the exemptions. So, with respect to these exemptions, what we have discussed, already we discussed it regarding the postal department. Only 4 activities are now exempted. Rest of the activities that are done by the postal departments are taxable. And with respect to this residential flat, that means whether it is taxable under FCM or exempted, we will discuss that particular point along with the example now. Just wait a minute. Let's take the example. Service provider is there. Service recipient is there. Let's take the example. Service provider X is a registered person and service recipient Y is a unregistered person. And that particular service is, let us assume that it is nature of renting we need to see here. That means with respect to that building which is given for residential purpose. Supplier Mr. X is a registered one and recipient is a unregistered one. And the nature of renting is renting a flat for residence of Mr. A. In that case, is it exempted or taxable, ma? Definitely, it is exempt. And let us assume that Mr. X is a registered person and Mr. Y is also a registered one. And this particular building was given to the employees of Mr. X, ma. That means here the particular flat was taken on rent by Mr. B for providing for residential purpose only, but for providing employees as a perquisite. That means for the sake of rent-free accommodation or something like that, this particular flat was taken on rental basis by Mr. B. Here is it exempted or taxable? That is the point we need to see. Here, first you will take this as an unregistered one. If at all Mr. Y is an unregistered one, then definitely it is exempted. Definitely it is exempt. It is exempt in the hands of a service recipient. So what about with respect to B employee? That means Mr. Y employee. Perquisite provided by Mr. Y to his employees is also not taxable, because already we discussed at this point with respect to CBIC circular. Okay. Now the third point is Mr. X is a registered one, provided services to Mr. C who is an unregistered one, but this particular Mr. C is using that particular building for his CA practice. Mr. C is using this particular flat as an office for his CA practice. In that case, whether it is taxable or exempted, ma? Definitely it is taxable, but under FCA. Being the recipient unregistered person, it is taxable under FCA. Sir, is IDC can be claimed? No, because Mr. C is being unregistered, IDC shall not be allowed to him. That is the point. Okay, ma. And next one is Mr. X is a registered one and Mr. D is a unregistered one. Okay, this particular building, it was a commercial building which was actually given as a shop, ma. In that case, is it exempted or taxable? Yes, definitely that particular building is a commercial building. Shop is a commercial building, but being the recipient is an unregistered person, it is taxable under FCA. Okay. And another example we can discuss is, let's take the example, Mr. X who is a registered one and Mr. E who is also a registered one. Here that particular flat was taken on rent for the residence of Mr. E. Here when the recipient has taken this particular building or particular flat on rental basis, in that case definitely it is taxable under RCA. If at all renting of the residential building for the use as a residence to registered recipient, then automatically what can be applicable, ma? RCM can be applicable. That is the point. But it was exemption was given, ma, later on. But that notification was given on 1st January 2023. Therefore, it is not applicable to your exams for May. Even though it is covered under RCMC, but here he suffers loss, na. See, with respect to that case, if the registered sole proprietor has taken the residential building for his own residence on rent, definitely GST will become payable under RCM. But definitely it is a practical problem, na? Because registered person is not eligible to claim IDC on it. Because it is not in relation to his business or profession, because it was used for his residence, whatever the GST he pays, that is by Mr. E, he cannot claim IDC. That's why from 1st January 2023 onwards, this particular service has been given exemption, ma. Based on the exemption, he is not liable to pay the GST if at all it was used for his own business, own residence. And another example what we can discuss is, Mr. X is a registered one, Mr. F is also a registered one, and this particular building was taken on rent by Mr. F for the sake of his employees. That means the renting of the flat was done by Mr. F to provide this particular building to his employees as a perquisite. In that case, is it taxable or not, ma? So, with respect to this point, ma, F is actually taken that particular building as a perquisite to his employees. It is taxable under RCM. It is taxable under RCM. Therefore, who is liable to pay the GST, ma? Mr. F is liable to pay the GST under RCM. Because this residential building, even though it was used as a residence, it is not for himself, na? Therefore, exemption will not be given to him. Definitely it is taxable under RCM. Sir, is ITC of this GST paid on this particular rental service is allowed to Mr. F or not? Yes. Since this particular service has been used in the course or furtherance of his business, whatever the tax pays under RCM, on that definitely can claim the ITC. Okay. Next point is Mr. X, who is a registered person, and Mr. G, who is the unregistered one, has taken a flat, but Mr. G is using this particular flat for his CA practice. In that case, what is the position, ma? If at all he uses, previously we discussed this point, but what about this particular point, ma? If at all he uses for his own purpose. Let us say, sorry, previously we discussed about unregistered, na? Okay, fine. Now he is registered. If at all Mr. G is registered, in that case, it is taxable under RCM. And definitely, he can claim the ITC on this particular rental service, whatever the GST he pays. Okay. Let's take the last example. Let's say Mr. X is there and Mr. H is there who is also registered. The building is a shop, ma. That particular building is a shop. Then GST is payable and is it taxable? Yes. Under FCM or under RCM? Definitely it is covered under FCM. Why, ma? Shop is a commercial building, hence no exemption and no reverse charge is applicable. That is the point. Okay. Sir, is ITC allowed to Mr. H? Yes. Definitely ITC is allowed to Mr. H, ma. Since he is a registered one and this particular rental service is used in the course or furtherance of business. That is the point you need to remember with respect to renting of residential building, ma. Okay. So this is the point what we have discussed with respect to residential dwelling related, ma. It is covered under exemptions as well as under RCM concept. If at all the building is used for residential purpose, if the recipient is a registered one, then only it is taxable under RCM. If the recipient is an unregistered one and the building is used for residential purpose, it is exempt. If at all that residential building is used for commercial purpose, recipient is a registered one, then it is taxable under RCM. If the service recipient is the unregistered one, then it is taxable under FCM. That is the point we need to remember with respect to that. Okay, ma'am. And after discussion of that particular topics which are in relation to FCM, RCM concept and exemptions, now we need to keep more focus on exclusive exemptions that are there under GST, ma. Okay. And before moving further, we will see the topic in the material also. So up to that completed. Now the exemptions chapter is the thing what we are going to discuss now, ma. In exemptions, the first exemption we will discuss is healthcare services, ma. So the point is with respect to this exemption, the exemption is in relation to healthcare sector, ma. Previously, whatever the healthcare services that are provided by clinical establishment are exempt. Generally, the scope of this particular healthcare service includes diagnosis, treatment or care in any recognized system of medicine is exempt. If at all it is an unrecognized one, definitely it is taxable. Okay. But whereas with respect to room rent charged by any clinical establishments were also treated as fully exempt. because they are also treated as healthcare services at that time. Okay, and the above exemption is also available irrespective of the amount of room rent that is charged by clinical establishment. But now there is an amendment with respect to that particular point, ma. That particular point is this particular exemption. Okay. Now, what is the new provision is here? In respect of room rent, except for ICU, that is intensive care unit, or CCU, that is critical care unit, or intensive cardiac care unit, or neonatal intensive care unit, that is NICU. There would be full exemption, ma. That means irrespective of the amount, if the patient was there in any of these wards, it is fully exempted irrespective of the value of the room rent. But in case of any other category of rooms other than these, exemption is available only when the rent is less than or equal to 5,000 rupees per day. What are the units that are exempted there, ma? Like ICU, intensive care unit, or critical care unit, intensive cardiac care unit, neonatal intensive care unit. With respect to them, full exemption can be claimed irrespective of the amount of the rent. But whereas with respect to other category of the rooms other than these, in those cases, definitely what is the position, ma? Exemption is available with respect to the room rent which is less than or equal to 5,000 rupees per day. If the rent for such room is more than 5,000 rupees, in that case, definitely full amount will be taxable. Let's say if the room rent is 8,000 rupees, in that case, not the excess of 3,000, ma, total 8,000 will be taxable. Total 8,000 will be taxable. That is the point we need to remember. Okay, ma'am. Next point is with respect to passenger transportation, ma. What is this passenger transportation services? It is exclusively with respect to airways, ma. It is exclusively with respect to airways. With respect to airways, transportation of the passenger by air, if at all, either origin or destination was there in northeast states like Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, Bagdogra, which is there in West Bengal. If either origin or destination is there in any of these places, the transportation of passenger, that means on these flight charges, definitely you are not liable to pay any GST, it is exempted. But now, the word in economy clause was added with respect to that. Now, what is the word that was added with respect to these northeast states, ma? What is the point that was added to these northeast states? With respect to economy class is the word that is used, that was actually added to that. That means what is the impact of the amendment now? Now, in respect of the flights for which the origin or destination is in northeast states, GST shall be chargeable if at all it is a business class or a first class ticket. So the exemption is now restricted only to the economy class only. See this, with respect to passenger transportation by airways, origin or destination is there in northeast states. If at all it is the economy class, it is exempted. Other than economy class, now taxable. This is the amendment. Rest of the points remains the same. Regional connectivity scheme. What is the fund you are getting from the government is exempt. Amount charged from the customers, it is taxable in order to encourage the air traffic. And with respect to other parts of India, full amount will be taxable. But the amendment is in this particular area only. So now, whether the origin is destination is there in any of these northeast states, if at all it is the economy class, then only it is exempted. If at all it is a business class or a first class ticket, then definitely GST is payable. That is the point you need to remember with respect to this exemption. Okay. And with respect to this point, previously, with respect to previously there was an exemption notification with respect to transportation of the goods, by the aircraft or by the vessel from the customs station in India to a place outside India. It was exempted. The exemption was there up to September 30th, 2022 previously. So, what is the exemption that was there previously? When the goods are transported by aircraft or vessel from the customs station in India to outside India, technically it is export of the goods with respect to the transportation. There was exemption which was there up to September 30th, 2022 but this time the exemption notification has not been extended. Therefore, with effect from 1st October 2022, if the place of supply is there in India, then automatically it is taxable. Okay. GST is now payable on the transportation of the goods by air or vessel from customs station in India to a place outside India. The exemption notification was withdrawn. This is the point. Okay, ma. And same point will be applicable to railway equipments, ma. So, with respect to railway equipments, previously there was exemption. That is services by way of transportation of railway equipments or materials by the train or by the ship from one place in India to another place, definitely it shall be exempted. That means with respect to railway equipments or railway materials, when they are transported through train or through ship, definitely they are exempted. But now that particular point was not there. That means now this exemption was withdrawn. In those cases, now GST is payable on the transportation of railway equipments or materials which are now transported by the rail or by the vessel within India. That is the point you need to remember. Now this particular exemption notification was also withdrawn. Our next point will be with respect to this. Already we discussed this point now previously. There is a value based exemption with respect to this particular GTA now. That means if the freight charges with respect to a single car, there is one truck. In that particular truck, there is only one consignment. That particular one consignment transport charges are less than or equal to 1500, it is exempted. And if at all it is more than 1500, then what is the position, ma? Definitely full amount will be taxable. That was exemption that was there previously. But now it is not there, ma. That exemption was withdrawn now. Therefore, GST is payable on the GTA services by way of transportation of the goods, irrespective of the amount of the freight charged for consignment or for consignee. That means exemption up to 1500 or 750 was now withdrawn. Now that particular exemption notification was not there. Our next point will be here in respect of this one will be with respect to agro-based. With respect to agro-based, the scope of exemption, that means storage of warehousing services was there previously. That particular warehousing service was, what is the position now? The scope of that particular exemption was now narrowed. Hence, now the exemption is limited to warehousing of few items only. Previously, the exemption was there with respect to agriculture produce, rice, minor forest produce, cereals, pulses, fruits, nuts, vegetables, spices, copra, sugarcane, jaggery, raw cotton, flax, jute, unmanufactured tobacco, betel leaves, tendu leaves, coffee, tea, like that. All these points are covered under warehousing services. That means warehousing services related exemption notification. All those activities are exempted. But now that the scope of this particular exemption entry was now reduced, not reduced, it was significantly reduced. Now warehousing or storage services shall be exempted only with respect to few items. Now warehousing or storage services are exempted only if they are relating to agriculture produce, rice, minor forest produce, cereals, pulses, fruits and vegetables. Okay. And except that, rest of the things are taxable. Now, what are the items that were removed? That is important. What are the items that are removed based on that? I already told you now. Agriculture produce still exempted, rice exempted, minor forest produce exempted, cereals, pulses, fruits and vegetables. Whereas spices, copra, sugarcane, jaggery, cotton, flax, jute, unmanufactured tobacco, betel leaves, tendu leaves, coffee, tea. All these items are now removed from the exemption notification. That means with respect to these activities, definitely it is exempted or taxable now. Definitely it is taxable. Exemption notification is applicable only with respect to these items which are there on the screen. Okay. And in the same way, with respect to agriculture produce, fumigation of agriculture produce was previously exempted. But now, that particular exemption entry was also now withdrawn. Services by way of fumigation in a warehouse of agriculture produce is now omitted. Definitely those services are taxable. That is the point we need to remember. Okay. And in the same way, few activities in relation to common biomedical waste. Previously, with respect to common biomedical waste treatment services, if at all they are provided to hospitals, it is exempted. But now the government has made a logic here. These services are not directly in relation to patients. They are having the indirect nexus of this healthcare here. Therefore, definitely there is no need for that particular exemption. Therefore, GST is payable on the services provided by operators of common biomedical waste treatment services. That exemption notification that was there previously, now it was removed. Okay. In the same way, previously the services provided by Reserve Bank of India, IRDA, SEBI, GST network to the central, state or unitary governments are exempted. But now that particular exemption notification was withdrawn and it is taxable. Now that particular exemption notification was withdrawn and it is taxable. That is also another point you need to remember. Okay. And in the same way, another few points, even though that are not there in the PPT, like slaughtering of animals and services provided by Food Safety and Standards Authority of India with respect to the services of giving license to the food business operators. Previously, it was exempted, but now that exemption notification was withdrawn, it is taxable. Okay. And in the same way, this is the important one. I think so from the examination point of view. The third point which is there on the screen is important. Services received by RBI from outside India in relation to foreign exchange management services. Then previously it was exempted, but now that particular exemption notification was withdrawn. Is it taxable or exempted now? It is taxable. Services received by RBI from outside India. Technically, it results into a importation of service. Therefore, tax is payable under RCM. Previously, it was exempted, but now that particular exemption notification was withdrawn. Therefore, it is taxable. That is the point you need to remember with respect to exemptions. Okay. And another point is there with respect to tour operator service. With respect to tour operator service, which is performed with respect to tour operator service, if at all, previously the point is like this, it was actually, what actually the point is there previously, when the services are provided by the tour operator will be exempted. If at all, this particular tour operator is providing service to a foreign tourist in relation to a tour which is conducted 100% outside India, that was exempted. This was a previous notification we are having with us. Services provided by the tour operator is exempt if at all two conditions are satisfied. What are the two conditions that are required to be satisfied? First one, those services should be provided to a foreign tourist, and second one, they should be provided in a tour outside India, 100% outside India. Then only it is exempted. If at all it was done 100% in India, no exemption was there, fully taxable. But the point remains silent with respect if at all it is partly provided in India and partly provided outside India. Now that particular point was also inserted in this particular amendment, and we will see it now. Okay, ma. So what is the exemption that was previously there with respect to tour operator service, ma? So in order to get the exemption, there are two conditions that are required to be satisfied. What are the two conditions that are required to be satisfied, ma? First one, the service should be provided to a foreign tourist. And second one, the service is performed 100% outside India. Then only that particular service is exempted. If at all the total service is performed in India, definitely it is taxable. But the exemption was silent with respect to an activity which is performed partly in India and partly outside India. So in order to cover that particular situation, one clarification was issued. Okay. So with respect to this point, here the amendment in respect of tour operator service will be which is performed partly in India and partly outside India and supplied to a foreign tourist to the extent of value of tour operator service which is performed outside India shall be exempt. That means if the tour is performed partly in India and partly outside India, in that case, to the extent of value of the service which is performed outside India shall be exempt. That is the point we need to remember. So, in order to get the exemption, two points are needed to be satisfied here also. First one, the service is provided to a foreign tourist. Second one, the service is performed partly in India and partly outside India. But the exemption will be restricted to the extent of value of the tour operator which is performed outside India only. That is the point we need to remember. Okay. The question is here, sir, what is meant by the word foreign tourist? Foreign tourist means the person who is generally not resident in India and he should come to India for non-immigrant purpose and the stay period shall not exceed 6 months. Then that person will be treated as tourist. First point, he should be a non-resident. Second one, should not come to migration purpose to India. Third one, the stay period in India shall not exceed 6 months. If all these points are satisfied, then that particular tourist is known as foreign tourist. Second one. So how to compute the value with respect to this? This is the way how to compute the value. See here, if at all these tour services are provided to Indian tourists, definitely it is fully taxable. If at all it is provided to Indian tourists, it is fully taxable. If at all tour operator services are provided to foreign tourists, tour conducted wholly in India, in that case it is fully taxable. If at all tour is conducted wholly outside India, then 100% it is exempted, and this is a new exemption that is there. Tour conducted partly in India and partly outside India. In that case, exemption is available only for the value of the tour operator service which is performed outside India. Sir, how to compute the value? These lower of these amounts, that is total value of consideration. So total value of consideration into number of days for which the service is performed outside India divided by total number of days in the tour. Okay. So the total consideration charged for the entire tour. What is the total value of the consideration? The total consideration charged for the entire tour into number of days for which the tour is performed outside India divided by total number of days comprising the tour. Okay. What is the amount we will get? It should be compared with 50% of the total consideration. In that case, whichever is lower, that will be exempted. Okay. Sir, how to compute the number of days here? While making the above computations, any duration of the time which is more than or equal to 12 hours, one full day will be taken as one full day, and any duration of the time which is less than 12 hours shall be taken as half day. Based on that, you need to take the number of days. You need to take the number of days. Okay. In that case, how to compute the value, we will see one example with respect to this. Let's take the example. A tour of 5 days. In that 3 days are in India and 2 days are in let's say neighboring state Tibet, or okay, take the example of Nepal. It is there in 2 days in Nepal. And the total consideration is 11 lakhs. Okay. In that case, not 11 lakhs, take it as 1 lakh. 11 lakhs is a difficult one to compute now. So that's why we'll take it as 1 lakh. So in this case, what is the exemption we will get? What is the total contract price, 1 lakh. So in that 1 lakh, what is the maximum percentage you will get? 50,000. This 50,000 should be compared with the total consideration into number of days that is there in outside India, that is 2, divided by total number of days, 5. How much amount we will get here? 40,000. In that, which one is lower? 40,000 will be the exemption and the remaining 60,000 will be taxable. Okay, ma? Another example what we can discuss is, let's take the example. We will reverse that particular scenario. Tour of 5 days. In that 2 days in India and 3 days in Nepal. The total consideration will be 1 lakh rupees. In that case, how much exemption we will get? That is 50% of 1 lakh, that is 50,000 rupees. It should be compared with total contract price into number of days, outside India, 3 divided by 5. It is equal to 60,000. In that case, which one is lower ma? 50,000 will be exempted and remaining 50,000 will be taxable. Okay. This is the way how you need to compute the exemption ma. Okay. So the exemption is in relation to, there is an amendment in the exemption relating to culture, arts and sports related exemption. And with respect to that one, if you observe, what is the old provision that is there with respect to this, what we can say, this particular exemption? Services by way of training or coaching in recreational activities like arts or culture or sports. Okay, with respect to arts or culture, any person. With respect to sports, if at all it was done by the charitable entity, it is exempted. Okay. But now the amendment included the word with respect to the recreational activities. What are the recreational activities like dance, painting, music, with respect to that? Okay. Definitely these things comes under this music or dance or painting. All these things comes under recreational activities. Recreational activities. Previously, any person who has been giving training or coaching, it is exempted. But now, if at all this particular coaching or training is given by individual, then only it is exempt. That is the word that was used. That means, what is the impact of the amendment here? If training and coaching classes relating to the arts or culture are provided by any person other than individual, definitely they shall be fully taxable. If at all training or coaching in relation to recreational activities is provided by an individual, then only now it is exempted. If at all these services are provided by any person other than individual, they shall be fully taxable from now onwards. There is no change in sports related. With respect to sports, if at all they are provided by the charitable trust, which is registered under 12A or AB under our Income Tax Act, then only those training or coaching services are exempted, and rest of the cases it is taxable. So this is amendment with respect to sports and culture and arts relevant. If at all training or coaching provided by individual, then only it is exempted. By any person other than individual, it shall be fully taxable. Okay. Some clarifications with respect to few exemptions. First one is with respect to schools. What we should remember here. That means generally any fee that is charged for issue of eligibility certificate, for admission, or issuance of migration certificate, like that is transfer certificate like TC, by the educational institutions, whether they are exempted or taxable is the question. So what is the GST implications on the fee that is charged for giving eligibility certificate or issuance of TC, that is migration certificate, by the educational institutions? Whether they are exempted or taxable is the question here. Generally, whatever the services that are provided by the educational institutions, whatever the services that are provided by the educational institutions to the students, staff, faculty, okay, by way of conduct of entrance examination against any consideration in the form of entrance fee is exempt is the point what we know. Okay. With respect to whatever this, what is meant by the word educational institution, already you know, I think so at least. That means preschool and schools, occasional training centers, courses recognized by Indian law and Indian Institute of Management. Generally, those are recognized as educational institutions here. With respect to those educational institutions, any service they provided to its student, faculty or staff, and services provided by these educational institutions by way of conduct of entrance examination in the form of entrance fee, both are exempted. Same point will be applicable to here also. The question arises here with respect to eligibility certificate. That means they are the prospective students. They are going to be the students of the educational institution. Whatever the fee collects from them, is it also covered by the exemption notification? Is the doubt there? Yes, this exemption is wide enough to cover the fee that is charged from the prospective students also for getting the eligibility certificate, okay, which is needed to them in the process of their admission. So definitely student includes prospective students also. Therefore, that eligibility certificate fee is exempt. There is no need to pay any GST on it. In the same way, what about the migration certificate? The students are going to be past students, or once he is a student, now he is not a student of the educational institution. In the previous case, that person is going to become the student, but in the migration certificate case, he is not a student no more, but he is a past student. So the migration certificate to the people, to the students who are leaving or ex-students shall also be covered by this exemption notification. Definitely it is exempted. That means student means present students, past or future, or for whatever the consideration we receive from them, definitely it will be covered by the exemption notification and it is exempted. Okay, students past, present or future, every type of students are covered there. This is the point we need to remember. Okay. So the next point, not that much relevant from the examination point of view, I think. Whereas, if at all you paid annuities, any annuities or deferred payment for access to the road, like bridges, roads, something like that, okay, that will be exempted. The question arises here, the annuities or deferred payments that are paid for the construction of the road is also covered by the exemption notification. Answer is no, ma'am. So, that exemption notification covers only with respect to access to the road. It does not covers the construction of the road. So, if at all any road that was constructed and for that any annuities or different payments are made, it is not covered by the exemption notification. Definitely it is taxable. That is the thing you need to remember with respect to this point, ma'am. Okay. The next point is with respect to toll gate charges, ma'am. Sir, what about this toll gate charges here? What about this toll gate charges, ma'am? Generally here, the services by way of access to road, already we discussed, or bridge, on the payment of toll charges is exempt from GST is already we know. services by way of access to road or bridge on the payment of toll charges is exempt from GST is the thing already we know. Okay. And with respect to that, the question is here, any additional toll fee that is collected in the form of higher toll charges from the vehicles which are not having the FASTag, whether that one will be covered under the exemption notification or not is the question here. So the point you need to remember is here, applicability of the GST on the additional toll fee that is collected in the form of higher toll charges from the vehicles which are not having the FASTag, whether it will be covered by the present exemption notification or not is the question mark. And so whatever the additional fee that is collected in the form of these higher charges is essentially the payment of the toll for allowing the access to the road. Here you are not having the FASTag, that's why please pay 100 rupees. If at all you are having the FASTag, please pay 90 rupees. If at all you are having the FASTag, you will pay 90 only. If at all you are having the not having the FASTag, you need to pay 100. Why you need to pay 90 or 100? For access to the road. For access to the road. Definitely, this will be treated as allowing access to the road. It will be covered by the exemption notification. Whatever the higher toll charges that are collected from the vehicles which are not having the FASTags will be covered by the exemption notification. There is no need to pay any GST. That is the point you need to remember. This is the point already we discussed. GST implication on the fee charged for the issue of eligibility certificate or migration certificate. Is it exempted or taxable? Yes, definitely they are exempted. Already we discussed at this point. General eligibility certificate will be issued to the prospective students and migration certificate will be issued to the ex-students. Both are covered by this exemption. There is no need to pay any GST. Next one will be with respect to mining. This is not relevant for the examination point of view. So with respect to this point, generally with respect to this mining, what happens is from this mining pit to the goods, this particular mining items are needed to be taken to the railway track, which can be generally constructed by these mining operators only. So from this particular mine place to this railway track, the goods are needed to be transported. For the transportation of the goods up to this railway track, generally some lorries, tippers or trucks will be given on hire basis to the mining contractor. Okay, to the mining contractor. Those lorries, tippers, all these things are made available to the mining contractor. It will be available at his time, and whenever he wants to shift that particular mining items, okay, to the railway track area, these lorries, tippers, trucks will be used, and generally fuel costs will be borne by the mining contractor. The question arises here, whether this particular activity can be covered under GTA services related exemption notification. That means if at all, any person who is transporting the goods other than GTA and courier agency is exempt. Any person who is transporting the goods other than GTA or courier agency is exempt. Whether we can claim exemption under this particular category, here it is not in relation to the similar service that is provided by GTA. It is purely a renting of motor vehicle. It is a renting of motor vehicle only. So these type of services are not similar services that are of GTA. Therefore, the exemption cannot be claimed. Therefore, whatever the services that are provided by these lorry owners or somebody else to this mining contractor will be taxable because it is renting of motor vehicle, which is a supply of service and which is not covered under the exemption notification. Next one will be with respect to applicability of GST on the payment of honorariums which are paid to the guest anchors. Applicability of GST on the payment of honorarium to the guest anchors, whether GST is leviable or not is a question mark. Generally, any services provided by employee to the employer in the course of employment shall not be regarded as supply as per Schedule 3, whether that particular provision can be invoked here. Generally, many TV channels invite the guest anchors for participating in their shows and pays remuneration to them in the form of honorarium. Generally, those guest anchors cannot be treated as employees because they are neither covered under Schedule 3, that is 7 subsection 2, nor it falls under any exemption entry. Therefore, all these activities shall be taxable. That is the point you need to remember. But if at all that guest anchor aggregate turnover is less than 20 lakhs or 10 lakhs depending upon the state, then those people are not liable to take the registration and those people are not liable to pay GST then. That means if at all they are unregistered, they are not liable to pay any GST. Otherwise, they are liable to pay the GST. That is another one. And next point will be, this is Naam ke vaste, just read it and ignore it. Applicability of GST on the services in the form of assisted reproductive technology, just like test tube babies. Not exactly that one, but just like test tube babies like that. Assisted reproductive technologies and IVF, in vitro fertilization, those services will be covered under healthcare services or not is the question. Yes, they shall be covered in the definition of healthcare services as they involve treatment. That will be covered under the word treatment. So definitely it will be treated as healthcare service and it is exempted. And next one will be applicability of GST on the sale of the land after leveling, laying down drainage lines, etc. Okay, generally sale of the land is not subjected to any GST. But we have taken some land like this, we have made it some development activities there after leveling it and putting some drainage lines, all these things. The question arises, after that the land was sold. The question arises here, that sale of the land is liable to pay GST or not? Answer is, even if the land is sold, after carrying out some development activities, but still it would be treated as sale of the land only. Therefore, GST is not applicable. That is the point we need to remember. Okay. Okay, man. Even if the land is sold after carrying out some development activities, but still it is the sale of land, therefore GST will not be applicable. Sir, what about those activities like leveling, laying down of drainage lines? Are they taxable to GST? Yes, they will come under supply of service. Those development activities are liable to GST, but not the sale of the land after those development activities. That is the point you need to remember. And in the same way, with respect to applicability of GST on the tickets of private ferry used for passenger transportation. That means what the point is here? Transportation of the passengers by a public transport other than predominantly for tourism purpose in a ship between the places which are there in India shall be exempt. That is exemption notification point ma. Transportation of the passengers by a public transport other than predominantly for tourism purpose in a ship between the places in India is exempt. The question arises, what about the private ferries? Whether that particular exemption notification is applicable or not is the question here. Yes, definitely the word public transport means it should not be means the transport should be open to the public. It is not actually in relation to ownership. They can be publicly owned or privately owned. But the word public transport means the transport should be open to the general public, which should not be restricted. Okay. Other than which is exclusively used for tourism purpose, definitely what is the position ma? Definitely we can use them. Okay. Sightseeing, food, beverages, music, accommodation, like that. Those things, except those things, the public ferry, which is actually used for passenger transportation, whether it is exempted or not, ma. Yes, definitely it will be covered by the exemption notification. So these are the points what we have discussed with respect to exemptions, ma. Where is exemptions chapter? Already, what are the things we discussed in the classroom are more important from the examination point of view? Those things, remember, that is more than sufficient, ma. Okay. See, postal department, previously 4 activities are taxable, rest of the things are exempted. But now what is the position, ma? Only 4 activities are exempted and rest of the services are taxable. Already we discussed at this point. Based on this, the adjustments are made with respect to postal department areas. And this point also we discussed already. Residential house given for residential purpose to unregistered person, then only it is exempted. If at all it is given on rental basis to a registered person, it is taxable under RCM. And with respect to this point, already we discussed it, ma. Northeast states. What is the point, ma? With respect to that economy, this is a point that was added. In economy classes, then only it is exempted. Like business classes or first class, definitely it is taxable. That is the only amendment in this particular point. Rest of the things remains the same. And this is my railway equipments or materials. Now, if at all they are transported by any route, they are taxable. In the same way, this value-based exemption was withdrawn, like 1500 and 750, those notifications value-based to GTA, which are there previously are no more. In the same way, with respect to agricultural produces storage, the scope was restricted. Many items are now reduced. Already we discussed at this point. And with respect to this one, remaining points remain the same. Fumigation services. Fumigation means fog. Okay. Fumigation services in a warehouse, previously it was exempted, but now it is taxable. And with respect to healthcare sector also, what is the point we have discussed, ma? Except these ICU, CCU, ICCU, NICU, rest of the cases, if the room rent is more than 5,000 rupees per day, full amount will be taxable. That is the amendment with respect to that. Already we know that one also. In the same way, with respect to training or coaching services, previously the word individual was not there. Now that was word added. So recreational activities, coaching or training given by individual, it is exempted. Other than individual, it is now taxable. And some new exemptions were introduced. Already we know. With respect to postal department, these 4 are exempted. And whatever the rest of the services that are there, definitely they are taxable. And tour operator service, already we discussed at this point also. Partly in India, partly outside India. In that case, how much exemption you will get? 50%, or in proportion to the service that is provided outside India, whichever is lower, that amount will be exempted. And how to calculate the number of days? More than 12 will be taken as 1 day, less than 12 it will be taken as half day. And after that, further some examples are there. All these examples also we discussed. And some exemptions are withdrawn. Like with respect to hotel, this is the important one, I think. This can be asked in the exam. Like with respect to hotel, inn, guest house, club, campsite. Previously, if the room rent is less than 1000 rupees, it is exempted. Less than or equal to 1000 rupees, it is exempted. More than that, full amount will be taxable. But now that exemption was now withdrawn. Now whatever the hotel room rent that is there, it is now fully taxable. This one is, I think, important. Rest of the things you can ignore. But we discuss like services provided by RBI, IRDA, SEBI, Food Safeties and Standards Authority to the food operators, services provided by GST network, fumigation, slaughtering of animals. This one is important. This one can also be asked. Stem cell storage banks. When the baby is there in the mother womb, there will be a connecting tube between the baby and the mother to take the food. Once the delivery was done, that particular body part will be stored in minus 190 degrees centigrade. Okay. Why in future any genetic diseases may happen by using that particular stem cell? Definitely there is a possibility to cure the genetic disease. That's why the stem cell storage banks will be there. Previously they are exempted, but now they are taxable. And this point also we discussed. Common biomedical waste treatment services to hospitals. They are not having direct nexus with the patients now. That's why they are not treated as healthcare services, these two cases. Therefore, what is the position? They are no more exempted, they are taxable. And with respect to few exemptions, Anganwadis. Whether Anganwadis are schools? Yes, as per the notification, Anganwadis can also be treated as educational institutions. Therefore, they are exempted. Next one, already we discussed at this point. Clarification regarding the applicability of GST on the activity of construction of the road where consideration received in deferred payments annuity. Exemption is with respect to access to the road. Access to the road. Access to the road, but not to the construction of the road. Therefore, here the exemption will not be applicable. It is taxable. And various boards, definitely whatever the central and state boards that are there, they can be treated as educational institutions and they are exempted. And already this point we know that loans guaranteed by the government, whether they are GST applicable or not, they are specifically exempted. Therefore, there is no need to pay any GST on the guaranteeing of loans by the government. And another point is also that generally, if any expenditure that is where the total expenditure is borne by the government to the coaching institutions by way of some grant or aid, definitely those type of coaching services are exempted. Okay, but here what is meant by the word total expenditure? A minimum of 75% of the expenditure should be borne by the government. Then only it is exempted. The question arises here whether the coaching services provided by the coaching institutes and NGOs under the scholarships for the student with disablement is exempted or not. Yes, they also treated as under this particular category and they are exempted. And already overloading charges at toll plaza, definitely they will be treated as access to the road only. They are exempted. Already we discussed at this point. And here clarification regarding renting of motor vehicle to state transport undertakings. Let's say for example, I have given a Volvo bus to APS RTC. Whether exemption is applicable or not. Yes, definitely the exemption will be applicable. Okay. Here, playing giving on hire is also treated as renting of vehicles. Both cases exemption will be applicable. Already we discussed at this point eligibility certificate for the future students, migration certificate for the past students, both are also exempted. This mining pit, from mining pit to the railway siding, it is not in the nature of GTA services, therefore definitely it is taxable. And clarification with respect to honorarium to guest anchors, they are not treated as employees, it is taxable. And with respect to this point, just like test tube babies, those things comes under healthcare services and it is exempted. With respect to clarification regarding hiring of vehicles by the firms for the transportation of their employees to and from work. That means if at all specifically any non-AC contract carriage was there over a predetermined route on a predetermined schedule, in those cases exemption will not be available. Because when the contract carriage is hired for a particular period of time, definitely when it is taken on hire basis or when it is conducted to or when it is used for tourism purpose, even though it is non-AC contract carriage, it is exempted. Definitely there is no need to pay any GST. Sorry, definitely no exemption will be applicable. It is taxable. That is the point we need to remember. And private ferries, what about this private ferries? They are also used for public transportation only. That's why the exemption will be applicable and they are exempted. So this is with respect to exemptions chapter, what we need to remember. Okay. So the next topic will be input tax credit. Already you know that this is the most important topic, input tax credit. In that there are few amendments we need to remember here. With respect to that, ITC. So what are the amendments that are there? We need to see now. In that the first point or the first amendment you need to discuss is here time limit for the availment of ITC. Before discussion on that, first of all, one should know what is the existing provision with respect to the time limit for availment of ITC. Yes, ma'am. Anybody already? I think you knows that, na? What is the section number which deals with availment of ITC, ma'am? 16 subsection 4. What is the present or existing provision, ma'am? With respect to ITC on the invoices relating to a financial year, invoices as well as debit notes that are issued in any financial year. What is the maximum time limit for claiming the ITC, ma'am? Next financial year, September month, GSTR 3B filing date, that is October 20th, or actual date of filing of annual return, that is GSTR 9, whichever is earlier. That is the last date for claiming the ITC. Sir, what is the amendment now in this particular time limit for availment of ITC? So there is a change in the maximum time limit here. Previously, the point is the due date of filing GSTR 3B. The due date of filing GSTR 3B for the month of September of the succeeding financial year. That means next financial year, September month, GSTR 3B filing date. That is October 20th. Now that particular point was replaced by 30th November. That point was replaced by 30th November of the succeeding financial year. After the end of the financial year in which such invoice or a debit note is issued. So there was an amendment in the time limit for availment of ITC. So now after amendment, what is the maximum time limit for claiming the IDC? Next financial year, September month, GSTR 3B filing date, that is October 20th, was replaced by November 30th of the succeeding financial year. After the financial year in which such debit note or the invoice is issued, or actual date of filing of GSTR 9, that is annual return, whichever is earlier. So with respect to that, now what is the IDC we can claim based on that? Let us assume that there was an invoice. Let us assume that there is an invoice for 4 lakh rupees. There is invoice for 4 lakh rupees plus GST 20,000. This particular invoice was issued on 28th January 2023. And for this particular invoice, a corresponding debit note is also issued. That debit note is issued for 50,000 rupees along with GST of 2,500, and it is issued on 15th July 2023. With respect to first case, that is with respect to invoice. With respect to invoice, on what is the relevant financial year with respect to that invoice, on which date the invoice is issued? January 28th, 2023. In that case, what is the relevant financial year? Here 22-23 is a relevant financial year. And let us assume that the annual return was filed on December 15th, 2023. In that case, with respect to this 4 lakh rupees worth invoice, for claiming 20,000 rupees as ITC, what is the cutoff date? So what is the cutoff date, 30th November 2023 or December 15th, 2023, whichever is earlier, that is the cutoff date for claiming the ITC. In our example, November 30th is the cutoff date for claiming ITC on the invoice worth 4 lakhs to claim the ITC of 20,000 rupees. What about the second case? With respect to second financial year, it is filed on 17th December 2024. A debit note is issued in the financial year, that means July 15th, 2023. This is issued on July 15th, that is 23-24 financial year, it was issued. With respect to 23-24 financial year in which the debit note is issued, what is the actual date of filing of annual return? December 17th. So, November 30th, 2024 or 17th December 2024, whichever is earlier, November 30th. That is the cutoff date for claiming the ITC with respect to that debit note. So this is a amendment that is there with respect to time limit for availing the ITC. That is the point we need to remember. Okay. And next point will be so additional conditions were introduced in section 16 subsection 2 that needs to be satisfied before ITC can be availed by the recipient. So what is the point that is there? Generally, what are the conditions that are there under 16 subsection 2? Generally, in order to claim the IDC, what is condition number 1? The registered person should have the documentary evidence. Then only he can claim the IDC. Documentary evidence means tax invoice, debit note, reverse charge invoice, bill of entry, revised tax invoice, or document issued by the ISD, like that. Whatever the documentary evidences you are having, based on that only you can claim the ITC. That is the first condition. Second condition, the person who is claiming the IDC should receive the goods or services. Then only he can claim the ITC. So, in order to claim the ITC, what is the condition, ma? Definitely those goods or services should be received. That is the second condition. And the third condition will be supplier has to pay the GST to the government. Okay. So, the third condition will be supplier has to pay the GST to the government, either by way of cash or by way of utilization of IDC. Then only the recipient will get the IDC. That is the third condition. And the fourth condition is recipient has filed GSTR 3B. And along with that, fifth condition is also there, which is prescribed under rule number 36.4. That means the invoice details should be furnished by the supplier in his GSTR 1. Those supplies should be communicated to the recipient in GSTR 2B. Then only the recipient can claim the ITC. So these are the conditions till now we know in order to claim the ITC by the recipient. Sir, now the question is here, what is the amendment now? Apart from above 5 conditions, what we have discussed right now, a new condition has been inserted in 16 subsection 2BA. That point it simply says, in respect of the supply received, the details of ITC communicated to the registered recipient under section 38 in the form of GSTR 2B has not been restricted. What is the point there, ma, here? That means ITC with respect to a supply communicated in GSTR 2B shall be availed by the registered person only if it has not been restricted. That is the condition. And this point is actually not relevant from the examination point of view or something like that. Ignore. This is the main point you need to remember. Okay. In order to claim the ITC with respect to the supply communicated in GSTR 2B shall be availed by the registered person only if it has not been restricted. That means the restrictions will be specified under section 38 mark. So here, if you observe this particular amendment, GSTR 2B will be divided in two parts. One is in 2B you can claim the IDC that is eligible, and second one, that one will be there, which is a restricted one. Okay. So you cannot claim the IDC if at all that IDC is reflected in restricted part of 2B. So when this particular points you should remember when they are restricted or not. For that, you need to know the section 38 mark. So that means if at all the conditions that are there under section 38 are attracted, then your IDC will be restricted in GSTR 2B. That is the logic. So if section 38 situations are attracted, in those cases, what is the position, ma? Definitely your IDC will be restricted in GSTR 2B. That is the point. Okay. Sir, what are the corresponding amendments that are there in section 38 with respect to that? Okay. So Till now, what does section 38 deals with ma? 38 currently prescribes that what is the information that will be made available in GSTR 2B. Generally, what the section 38 deals with ma? What should be the information that will be available in form number GSTR 2B? Generally, what is information that will be there in GSTR 2B ma? What are the outward supplies that are furnished by the supplier in his GSTR 1? Okay, based on that, it is an auto-generated statement which contains the ITC. This is the statement, this is the point that is there in section 38. Now section 38 was amended like this. Along with the details of inward supplies on which ITC can be claimed by the recipient. Its second part now will be there under GSTR 2B, which says that the details of supplies in respect of which such credit cannot be availed, whether wholly or partly, if at all some conditions are attracted which are specified in section 38. That means based on the amendment that is there in section 38, along with the details of inward supplies on which ITC can be claimed, definitely there will be a details of the supplies on which you cannot claim the ITC. That is ITC that is restricted by section 38. If at all the conditions that are prescribed in section 38 are attracted, sir, what can be the conditions that are specified under section 38? First one, the supplier has obtained registration. That means the supplier has obtained the registration by not following any rules or something like that. The supplier has defaulted in payment of the tax, and supplier declares the supplies in GSTR 1 which is more than GSTR 3B outward supplies of the supplier, whereas the supplier wrongfully avails any ITC, and if the supplier does not follows rule number 86B. If you observe all these points, there is no fault on the part of the recipient. If the supplier fails to do something, then recipient is not allowed to take the ITC. This is something strange. If the supplier has taken the registration based on some causes, if at all the supplier makes in default in payment of the tax, if at all the sales or the outward supplies that are declared by the supplier in its GSTR 1 is more than the outward supplies that are declared in GSTR 3B of the supplier, wrongful availment or utilization of ITC by the supplier, if the supplier does not follow rule number 86B, in all these cases that are prescribed under section 38 or attracted, then the ITC will be restricted in GSTR 2B. That ITC cannot be claimed. Generally, the main motto of this particular amendment is, if the supplier makes certain defaults, then ITC of the recipient shall be restricted. But what is the time period? What are the threshold limits? All these points are actually yet to be notified. So only for the theory purpose this point is there, but practically this particular provision will remain ineffective right now, because what is the time limit and for how much amount it exceeds, all these points are needed to be noted. So till those particular limits or the time limits are not notified, these provisions will be ineffective. That is the point you should remember. Okay. And the next point will be, so the next point will be in this case, There is an amendment with respect to ITC reversal on account of non-payment to the supplier within 180 days. So before going to discuss about amendment, one need to know what is the existing provision. What is existing provision, ma? Once you are having the documentary evidence, once you received the goods or services, even though the payment is not made to the supplier, but still recipient can claim the ITC. But from the date of invoice, within 180 days, the recipient has to make the payment to the supplier. Otherwise, whatever the ITC that was already availed by the recipient, it will be added to the output tax liability in the month when this particular 180 days will expire, and he is liable to pay that amount along with interest at the rate of 18% per annum from the date when he availed the ITC till the actual payment, till it will be added to the output tax liability. This is a existing provision that is there, ma. Okay. But another point is also there. If at all any part payment is there within 180 days, only proportionate IDC is needed to be reversed. Okay. That is also the another point, ma. That amount can be reavailed, that is okay. But now what is the amendment that is there? Now in case of non-payment of value plus GST to the supplier, within 180 days from the date of invoice, the registered person shall pay the IDC availed with interest under section 50 while furnishing GST or 3B for the tax period immediately following the period of 180 days from the date of issue of notice. This point remains the same. Nothing was changed. Okay. In this point, nothing was changed. But interest shall be paid under section 50 means interest at the rate of 18% from the date of utilization of IDC till the date of reversal of such credit. What is the point, ma? Here, what is the change that is there, ma? Interest calculation. Interest shall be calculated only when IDC has been actually utilized, not IDC that was taken, not when the IDC was availed. You are liable to pay the interest only from the date of utilization of IDC up to the date of reversal. Okay. And sir, another amendment is there. You should remember here. Even if the part payment of consideration has been made within 180 days from the date of invoice, still entire IDC is needed to be reversed. Previously, what is the point, ma? Only proportionate IDC is needed to be reversed. But now, the change, that means the amendment that is there is, even if the part payment of consideration was made within 180 days time limit, but still entire amount of IDC has needed to be reversed. That is the point you need to remember. Okay. But subsequently when the payment is made to the supplier, but again you can, whatever the IDC that was reversed, it can be reavailed. And as usual, the time period that is specified under 16.4 will not be applicable for reavailment. Remaining points remains the same. So what is this amendment we need to see now? A Limited sold the goods to P Limited, ma, and the goods value is 1 lakh rupees and GST amount is 18,000. Okay. And with respect to that, the date of invoice is November 12th, 2022, and the date when ITC was claimed will be, let us take 15th November 2022, and some part payment was made. Part payment, that is some 29,500 on 11th March 2023 was made, and the balance amount of 88,500 was made on 15th September 2023. Okay. So, whereas with respect to first case, what is the date of invoice, ma? November 12th, 2022. So, with respect to that, what is the date of availment of IDC, ma? On November 15th. So, here if you observe here, IDC was claimed on November 15th, ma, because the goods are received. That means even though no payment of the invoice was made, but still what we can do, ma, definitely we can claim the IDC. On which date 180 days will expire from the date of invoice, ma? So 12/11/2022, 6 months. When this particular will be expired, ma? 11 May 2023. Definitely 6 months will expire. So with respect to June month, so with 6 months will expire in the month of May. So with respect to June month, return is needed to be filed. Na? In that case, what is the position we need to see? Before amendment, what is the position? First, we will see that. How much amount that is needed to be added to the output tax value with respect to June month? What is the total amount? 18,000 into what is the amount that is paid before that particular date, 29,500 inclusive of GST. Na? So that means what is the amount? It is 1,18,000 minus 29,500. What is the amount we will get, ma'am? 1,18,000 minus 29,500. That means 88,500 is the remaining amount. So therefore 88,500 by 1,18,000. How much amount we will get, ma, here? 13,500. This 13,500 is only needed to be reversed along with interest. Therefore 13,500 into 18% into for which period you need to pay the interest, ma? Here from which date the IDC was availed, from that particular date you are liable to pay the interest. Okay. But now what is the point here is, once after this amendment, even though the part payment was made, but still total IDC is needed to be reversed. Therefore, instead of 13,500, now you need to reverse total 18,000 IDC. Okay. But whereas while computing the interest on this 18,000 into 18%, into you need to calculate the IDC from the date of utilization of IDC. Utilization of IDC up to the date of payment with respect to this, with respect to June when you will pay 20th of July. Up to this particular date, you are liable to pay the interest. Okay, this is the point you need to remember. Whereas with respect to the prior to the amendment, only proportionate IDC is needed to be reversed. So that proportionate IDC, 18% interest will be there. But from the date when that particular IDC, okay, with respect to November month, that IDC was taken, that means from December 20th, 2022 onwards, until you paid the amount. Okay, that is 7, 20, that means July 28, 2023, you are liable to pay the interest, whereas before amendment. But after amendment, you are liable to pay the interest only from the date of utilization. It was not given in the problem, in our example, what we need to say. So therefore, 18,000 into 18% into from the date of utilization till the date of payment, only you are liable to pay the interest. That is the point you need to remember. But reversal amount will differ. Whereas before amendment, only proportionate IDC is needed to be reversed. But now, the total IDC is needed to be reversed. That is the point you need to remember. That means whereas previously section 41 was there, which deals with first initially IDC will be given on a provisional basis. Later on, when the recipient files a GSTR 3B, his IDC will be confirmed. Like that, the point was there. But now, a person shall be entitled to avail the IDC on self-assessment basis in his return. Okay, based on the GSTR 2B that is generated, you need to file the GSTR 3B. Then the amount will be credited to the electronic credit ledger on a final basis and not on a provisional basis, which was earlier. Okay, so when the supplier uploads the details in GSTR 1, automatically they will be reflected in GSTR 2B of the recipient. When they are reflected in the GSTR 2B of the recipient, in that case, definitely you can claim the IDC. But even though they are actually uploaded in GSTR 1, the tax has not been paid by the supplier. In that case, what is the position? What was the IDC that was claimed previously? It should be reversed along with interest. That is the point we need to remember. In the same way, later on when the supplier makes the payment to the government, definitely you can reavail the IDC. But whereas the reversal and reavailment, actually those were prescribed, but government is yet to prescribe the rules how to implement it. Till down it is only namke vaste, it will be there on the paper. Okay. The simple concept is previously IDC is allowed on provisional basis. Now it is allowed as a final basis. But later on when the supplier fails to pay that, you need to reverse the amount along with interest. That is the simple point. Okay. And this point is also namke was same, not of that much important. Generally, with respect to leasing, motor vehicles, vessel, aircrafts are leased, then definitely as per 17 subsection 5, you cannot claim the IDC. Sir, with respect to any leasing, IDC is not allowed, or only with respect to motor vehicle, vessel and aircraft is only IDC not allowed. This clarification was given. The availment of IDC is restricted only with respect to motor vehicle, vessel and aircraft. List of the leasing transactions, definitely you can claim the IDC. That is the point you need to remember with respect to IDC, ma'am. And the next chapter will be the amendments with respect to what we are discussing is registration. So with respect to registration, there is only one amendment that is there that is relevant for the exams. Change in the grounds for sumoto cancellation of the GST registration. That is, there is an amendment in section 29, subsection 2. So, what is the point that is there? What does 29 subsection 2 deals with? It deals with various grounds and the defaults. If at all the registered person has incurred, then department can proceed with sumoto cancellation of GST registration by issuing show cause notice. Okay. But whereas with respect to that point, in 29 subsection 2 cases, a composition dealer, what is the old provision is, a composition dealer has not furnished the returns for 3 consecutive tax periods. Generally, it will be like 3 quarters, something like that. But now what is the point, ma'am? It was amended that a composition dealer, if GSTR 4 has not been furnished beyond 3 months from the due date, then definitely his RC can be cancelled. Sir, what is the logic of this amendment there? Before, that means earlier, GSTR 4 has to be filed on a quarterly basis. Okay. Therefore, what is the point that is there under the old provision? It is good. Because if the composition dealer has made default of filing GSTR 4 for continuous 3 quarters, it may lead to cancellation of your RC. But whereas later on, the composition supplier is required to file GSTR1 on annual basis, that is on or before April 30th of next financial year. And you need to file CMP08, which is a statement at the time of tax payment. So definitely now the old provision is irrelevant now. That's fine. Section 29 now amended that if the composition supplier fails to furnish the GSTR4, that is on or before April 30th, then beyond 3 months, definitely your RC can be cancelled. That is the point you need to remember. Okay. And in the same way, a registered person other than composition dealer who is filing the returns on a quarterly basis, that is under QRMP scheme. What is meant by this QRMP schema? Quarterly return, monthly payment scheme, has not furnished the returns for a continuous period of 2 quarters. Has not furnished the returns for a continuous period of 2 quarters. And in the same way, the registered person other than the composition dealer who is filing the returns on a monthly basis has not furnished the returns for a continuous period of 6 months. That means previously with respect to GSTR 3B, it covered only the monthly ones. If at all GSTR 3B was not filed for a continuous period of 6 months, then only there is a possibility that RC can be cancelled. But that point is not made applicable to QRMP scheme. But now the QRMP taxpayers, if at all they have made default in furnishing GSTR 3B for continuous 2 quarters, if at all you are a non-QRMP taxpayer, then you made the default of filing GSTR 3B for a continuous 6 months period of time, then your RC can be cancelled by the department. These are the points that are there under registration you need to remember. The next point will be tax invoice, debit notes and credit notes. With respect to that, what are the amendments that are there? We will see now. So with respect to that point, tax invoice, debit notes and credit notes. So what are the amendments? We will see. So already this was a corresponding adjustment that was made with respect to the credit note also based on the change in the time limit that is there under section 16.4. So the maximum time limit for reporting a credit note will be 30th November of the next financial year or actual date of filing of annual return, whichever is earlier. Actual date of filing of annual return, whichever is earlier. Okay. And another amendment that is there is e-invoicing. Whereas with respect to e-invoicing, there is a change in the threshold limit. Previously, the threshold limit was 20 crores. Now that particular threshold limit of 20 crores was reduced to 10 crores. Therefore, any person whose aggregate turnover in any preceding financial year from 2017-18 onwards is more than 10 crores definitely is required to generate the e-invoice. Okay. In the same way, another point is also there. What is the point is here with respect to this? There should be a declaration on the invoice. There should be a declaration on the invoice. That means in case of a registered person whose aggregate turnover in any preceding financial year from 17-18 onwards exceeds 10 crores, but he did not issue or follow the invoice procedure, then he should make a declaration on the invoice that means what some cases, some exceptions will be there now. That means when your aggregate turnover exceeds a specified limit, but still you are not required to issue the invoice, like special economic zone units, banks, financial institutions, NBFCs, GTAs, passenger transportation service, multiplex movie theaters, local department, sorry, government department, local authority, government agencies, like that. Okay. Those people are required to make a declaration that they are not required to issue the invoice as per that particular provision. That means a declaration should be made. This is the point you should remember with respect to this point. Okay. And the next point is with respect to payment of the tax. So there are few, actually the major amendment will be interest computation only in this. So with respect to payment of the tax, new modes for the depositing is now prescribed under rule number 87. Generally, what are the methods that are prescribed? Internet banking, debit card or credit card. Without any limit, you can deposit. NEFT or TGS, even though offline without any limit. Over the counter, 10,000 rupees per challan per tax period. But along with that, now two new payment mechanisms were added to that. That is UPI and IMPS. Unified Payment Interface, and IMPS, immediate payment services from any bank, whether it is UPI payment or IMPS payment. Those are also now allowed to make deposit in the electronic cash ledger. Okay. So based on this, now what is the total story here, ma? The mode of payment, if at all it is a online mode, like internet banking, debit card or credit card, UPI, IMPS, without any limit, you can deposit in electronic cash ledger. With respect to offline mode, NEFT and RTGS without any limit. And over the counter, the maximum limit will be 10,000 rupees per challan per tax period. Okay, that is amendment you need to remember. And the next point will be so 53. Actually, retrospectively, it was there since 42 and 43 were not introduced, no matching concept was there. That means GSTR2 is actually practically not there. Therefore, the matching concept under 42, 43 will not be there, ma. That's why this particular section 50, in that wrong availment and utilization of ITC, how to compute the interest, that was actually modified, ma. So we need to see it now. Generally, section 50 covers three cases, ma. Case 1, when the person is liable to pay the GST but fails to pay that, whether in full or part. In those cases, interest is payable. Second case, when you claim excess ITC. Third case, when there is excess reduction of output tax liability by the supplier. Practically, the ITC reconciliation procedure was not there. Therefore, last 2 points are actually not relevant. Only case 1, that is non-payment or short payment, is only practically operative. Okay. So generally, the practical issues that are there with respect to this point is, in case the ITC is wrongly claimed by the registered person, and later on reversed by him. Reversed by him means by the way of addition of output tax liability or through the reduction of the ITC in his GSTR 3B. In that case, interest will be computed at the rate of 18% only. But the problem is here, ITC was wrongly availed by that particular person, but still it is not utilized. ITC was only wrongly availed, but not utilized. In that case, what is the position, ma'am? But it was still there in the electronic credit ledger of the registered person. it was not used or utilized, there is no loss caused to the government there. The question arises here, in that case also, are we liable to pay the interest? So that question is needed to be answered, and it was answered also in the amendment. And in the same way, if IDC was wrongly availed with respect to a month, with respect to, let's take the example of June. With respect to June GSTR 3B, it is required to be filed on July 20th month. In that particular month, IDC was wrongly availed. But this particular IDC was utilized in the month of Feb. So with respect to Feb, March 20th is the due date. So the question arises here, whether interest is needed to be calculated from July 21st or interest is needed to be calculated from March 21st. So in order to answer these questions, there were few amendments with respect to section 50. Okay. So what is the amendment that is there we are going to discuss now? The first point is, under which scenario interest is payable is the first question. So here, under which scenario interest is payable? Where IDC has been wrongly availed and utilized. Under which scenario interest is needed to be paid? Where the IDC has been wrongly availed and utilized. In those cases, only interest is payable. Okay. So, in other words, if at all IDC is only availed wrongly, but still it is not utilized, then no interest is needed to be paid. That is the point you should remember. Okay. Now, what is the scenario under which interest is payable? When IDC has been wrongly availed and utilized, then only you are liable to pay the interest. Okay. And there is one explanation that was also there with respect to this point. There is explanation to section 50. When the balance in the electronic credit ledger falls below the amount of IDC wrongly availed, then only it is deemed that wrong availment of IDC that was taken, that means wrongfully taken IDC was utilized. But that too, how much shortfall that is there? Up to that extent only you are liable to pay the interest. For your kind information, even though the rate of interest that is specified in the Act is 24 with respect to that, but practically it is inoperative, therefore 18% will be applicable. But in our masterminds material we have given 24% rate of interest, because which is there actually in that particular section. But that 24% is not practically operative, because some others are actually following 24%. So that's why we assumed it to be 24%. But while doing the computations in the exam, that 24% is needed to be replaced by 18%, because 24% is not inoperative. Only 18% is the rate of interest that should be applicable. Okay, I will show you where do you adjust the 24 to 18% later on. Wait a minute. So, what is the rate of interest? 18%. Although the section allows maximum 24% interest, but currently only 18% rate is notified. Therefore, what is the rate of interest? 18%. When it is needed to be paid? When the balance in the electronic credit ledger falls below the amount of IDC wrongly availed. Okay, sir, how to compute this particular interest? Interest is to be calculated on the amount of IDC wrongfully availed and utilized. Okay, from which period you need to pay the interest? Starting from the date of utilization of such wrongly availed IDC. That means starting from the date of utilization of such wrongly availed IDC till the date of reversal, you are required to pay the interest. Okay. Whereas if the utilization is with respect to furnishing of any return under section 39, in that case, the due date or the actual date, whichever is earlier, from that particular date is deemed to be the date of utilization. Whereas with respect to other cases, that means any notices were issued under 73, 74, because of that, there was a debit in the electronic credit ledger. In those cases, the date when there is a debit in the electronic credit ledger, from that particular date, interest is needed to be calculated. Okay, ma'am. So this is the point you need to remember. Circumstances in which interest is payable when the supplies has been declared in GST R3B, that is GST R3B filed before any proceedings under 73 or 74, but tax payment was delayed. In those cases, interest is needed to be computed on net amount, that is after adjusting the IDC. Next one is when the tax is made to the, when the payment is made to the government after issue of some show cause notices or proceedings under 73 or 74, then interest is needed to be computed on the gross amount before adjusting the IDC. Okay. The next point is, that is the new point, what you should remember is in this case, where IDC has been wrongly availed and utilized, interest is chargeable at the time of reversal of IDC. From which date interest is needed to be calculated? From the date of wrongful utilization of IDC till it is reversed, you are required to pay the interest. Okay. Sir, when IDC is deemed to be wrongly availed or utilized, when your electronic credit ledger balance falls below the amount of IDC wrongly availed, then only it is deemed that it was used, and how much shortfall that is there, on that shortfall you are liable to pay the interest. Okay. But whereas that debit balance occurred due to the filing of the GST return, then the actual date of filing the GST return or due date, whichever is earlier, that is the date deemed to be the date of utilization of IDC. Whereas if any debit occurred due to 73 or 74 or some demand proceedings apart from return filing, then the date when the debit created, that date is deemed to be the date of utilization of IDC. That is the point we need to remember. Okay. That means output tax, whether self-assessed or payable as a consequence of any proceedings, can be paid by utilization of electronic credit ledger. And already output tax, that means what is the output tax, whether it is self-assessed one or payable as per 73 or 74. In both cases, the balance of IDC can be used. That means the balance of IDC not only used for making the self-assessed payment tax, even the tax demanded can also be paid by using the IDC balance. In the same way, electronic credit ledger cannot be used for making payment of the tax which is payable under RCM. Already we know that. While paying GST under RCM, always pay by cash only. That is the point you need to remember. Okay. And next one. E-credit ledger cannot be used for making payment of interest, penalty, late fee or any other amount payable. Already we know that it can be used only for the payment of tax. And in the same way, electronic credit ledger cannot be used for the payment of erroneous refund sanctioned to the taxpayer where such refund was sanctioned in cash. If at all any refund is granted to you by way of cash, then your IDC balance cannot be used to refund that particular amount. It should be done in cash only through electronic cash ledger. And e-cash ledger may be used for making any payment towards the tax, interest, penalty or any other amount payable. That means the cash balance can be used to pay any amount in relation to GST. That is the point. Okay, ma, with respect to the topics that are there in the material, what we have discussed is with respect to this topic, ma. Like generally what we have discussed is here. Conditions for claiming the IDC. With respect to conditions for claiming the IDC, what is the position, ma? Some one additional condition was added, that means as per section 38. What is the condition that is there as per section 38, ma? With respect to that section 38, what is the condition that is there, ma? If at all the conditions that are there under section 38 are retracted, then definitely what is the position, ma? The IDC will be restricted and you cannot claim the IDC. That is the point what we have discussed. And there is a change in the time limit. That is also what we have discussed. Now the IDC claiming time limit will be November 30th or the date of annual return, whichever is earlier. And 36.4, what is 36.4 year amendment, ma? Along with invoices or debit notes also, they should be declared by the supplier in its GSTR1 or relevant documents, and they should be reflected in GSTR2B. Then only you can claim the IDC. And in the same way, with respect to this one, while computing the eligibility time limit for the debit note, we should take the year in which the debit note is issued, not the year when the invoice is issued. And already we discussed at this point also, this leasing of motor vehicle, vessels and aircrafts. With respect to them, only IDC is blocked, ma. Whereas rest of the cases, the leasing transactions, definitely you can claim the IDC. Okay. And with respect to that, that means now rule number, GSTR 2B is having eligible as well as ineligible IDC claims. And after that, we discussed regarding the registration, ma. Whereas with respect to registration, what is the point? Fly ash bricks related concept, already we completed 90% that was removed. And after that, what is the point that is there, ma? 29 subsection 2, already we discussed at this point also. GSTR 4 is needed to be filed on April 30th of next financial year. If at all it was not filed from the due date within 3 months, then RC can be cancelled. In the same way, with respect to this point, if at all you are a QRMP return filer, return was not filed for continuous 2 quarters, if at all that person is not non-QRMP person, ma, in that case the return is not filed return was not filed continuously for 6 months, then what is the position, ma? Definitely in that case, what is the position? Your RC can be cancelled. And with respect to tax invoice, debit note and credit notes, ma, invoicing, the limit of 20 crores was now reduced to 10 crores. And with respect to credit note also, based on 16.4 time limit, corresponding adjustment was there in this credit note also we discussed. And with respect to payment of tax, ma, the important thing is here, one new UPA and IMPS were created with respect to that. And see, this is the point I told you. The rate of interest is actually 24%, ma. But whereas, say this, but actually practically the rate of interest is only 18%. Therefore, whenever there is 24%, for the practical purpose or the exam purpose, please substitute 18%, because some others has taken the view of 24. That's why I also just put it there. But please restrict that 24 to 18% practically while doing the computation for your exams. Okay, now we need to see the returns, ma. So with respect to returns, nothing was that much important from here. Nothing was important here, ma, with respect to returns. So the maximum time limit for the rectification of the mistakes that are there, the maximum time limit was now reduced to November 30th. Sorry, maximum time limit for rectification of the mistakes or the errors is 30th November or date of annual return, whichever is earlier. And this point, ma, already we know that GSTR 2B is now having the eligible IDC as well as restricted IDC. That is the point. Okay. So that is the point you need to remember, ma. Nothing more important in that. And That means the previous, only after filing the previous month GSTR1, then only you are able to file the current month GSTR1. But the government can give exemption with respect to that. Okay. And after that, GSTR2 previously was there, now it was 100% omitted. Now GSTR2B is having two types. One is details of the inward supplies on which you can take the ITC, that is eligible ITC, as well as it will contain the details on which you cannot claim the ITC, that is restricted ITC. And after that, with respect to NRDP, what is the previous due date, next month 20th, or from the date when the RC is expired, 7 days, whichever is earlier. That is the point. Now that 20 was replaced by 30. So 13th day after the end of the calendar month, or from the date when RC was expired within 7 days, GSTR 5 is needed to be filed by this NRDP. The next point is, whereas with respect to QRMP taxpayers, they are actually eligible to make the payment either by fixed sum method or by what we can call it as self-assessment method. Previously, the power to pay the amount under fixed sum was given by section 148. Now it was shifted to section 39(7). Nothing new in that. Whereas previously the power was derived from section 148, which is a miscellaneous one. Now it is the specific one, 39(7). That is the point. Okay. And same point, if at all there are any mistakes in GSTR 3B, they can be rectified on or before November 30th of the financial year or date of filing of annual return, whichever is earlier. Already we know this one. Now the person cannot file the GSTR 3B for the current month. If at all for the previous month, GSTR 3B as well as GSTR 1 was not filed, he is not allowed to file the current month GSTR 3B. Now a person shall not be allowed to file GSTR 3B for the current month if the previous tax period GSTR 3B or previous tax period GSTR 1 was not filed. Okay. Whereas another point was added to the late FEMA, that is TCS statement. That is TCS statement is GSTR 800 rupees. Practically it is not for you because TCS is not there in your syllabus. If at all it is there in CMA inter-world syllabus, they can refer it. For them, there is a late fee of 100 rupees per day subject to a maximum of 5,000. GSTR 2 was now omitted. That is the point, already we know. So, these are the amendments with respect to the returns chapter as well as our total concept. So, I hope this video will be useful to you. And with respect to that, what are the important areas you need to keep focus is the amendments with respect to ITC and section 50 interest computation. Please focus on those areas, ITC chapter relevant amendments and section 50 related amendments. You need to keep focus on those areas. Okay. So that's it. All the best to all of you for your exams.